Good morning, dear viewer. This is the morning scoop. Today it's a bit different. The setup is different. We come to you live from the chairman's office of the Central Bank of Kenya. Wakili Andrew Musangi is the chairperson of the Central Bank of Kenya, and today we are privileged and honored to have a conversation with him so that he can be able to open a bit of what we don't know concerning the institution Central Bank. Going forward, the interactions we are going to have is going to open a lot for you to just get to understand what goes on there, managing the economy and everything else, what is inflation and stuff like that. So, without wasting much time, let me just bring the chairman on so that we can have the conversation. Chairman.
Good morning.
Welcome on the morning.
Thank you very much.
The morning school runs every Tuesday morning on West TV.
Okay.
I want to invite you to be our patron every time so that you follow the conversations.
Yes, indeed.
Thank you so
pleasure.
much.
Yes.
Let's begin. Central Bank is not a very open institution. Let's begin there. Let's introduce us the institution.
It's one of the perceptions I really am out to change. The central bank is a very open institution. Very open in the sense that it's a property of the public, belongs to the people of the Republic of Kenya. We are the principal bankers of your government, and therefore we only have one shareholder, the people of Kenya, constitutionally established. And as far as we are concerned, it's the banker for the people of Kenya, and the primary banker at that. We regulate the financial sector. One of our key responsibilities is ensuring stability of the entire financial sector and the payment systems, and therefore we are accountable to the public. So the perception of a closed central bank is history. There are central banks in Kisumu, Mombasa, in Nyeri. We have currency centers in Nakuru, Kisii. So really the perception of not being part of the people, while we may not be your typical retail bank like KCB, Equity, Sidian Bank or the rest, we are the banker for the people of Kenya by virtue of having our key customers being the banks and the government. Yes.
So what's the mandate like when you wake up in the morning?
Yes.
What is it that you aim to achieve before the end of the day? That's before the day ends.
Yes. What keeps the central bank awake every day is ensuring we are fostering a stable financial system in the country. That is the core mandate of any central bank. And by doing so, you impact everything. Foreign exchange rates, interest rates, and inflation must be tackled by a central bank. So that's what keeps central banks awake at night, every single day.
You just mentioned about the branches. You have a branch in Kisumu, Mombasa, Nyeri,
Eldoret.
Then you said
Nyeri is a currency center, Nakuru is a currency sorting center, Kisii is a currency sorting center.
One would have imagined that Kenya being a devolved system of government, any key institutions should also be in the 47 counties. Any plans to that direction?
Not at all, and for good reason. The central bank, as I said, is not a retail institution. That's number one. So, in fact, accessing the central bank is not necessarily an aspect of going physically to the central banks. For example, our currency sorting centers simply deal with distribution of currency across the country. They do not deal with you and me walking into the bank. The second thing that we have shifted to, especially now in our current strategy period, is efficiency. Now, to that extent, what am I driving at? Central Bank aims to deliver a lot of its services digitally. We are no longer going to be in brick and mortar where you have to put up big, expensive buildings in 47 counties simply because I want to reach the people of Bungoma or the people of Kwale or the people of Meru. It is too inefficient. It's too inefficient. It is far easier for the bank to interact with its customers, for example, in financial markets, digitally. Today, more and more people are dealing with M-Pesa. You don't see people running to the bank because you paid them for mboga. No, they simply receive it on their phones and they're able to pay everybody they need to pay without ever physically visiting a bank. And that's the future. The old days of building monuments in every town are long gone. And if you look at the banking sector, the approach that's being taken today is very similar. Yes.
You see, there is this monetary policy committee. The monetary policy committee has its functions, chaired by the governor of the central bank.
Correct.
Every time we hear of MPC, we start having chills. Why? Because either you guys are telling us the shilling is behaving in this manner, and therefore we are going to have a few of the things that we expect. They're not going to be the same. So what is it with the MPC that you would like the government, the public to know, so that they have to associate whatever conversations around MPC, not with bad things, but with good news?
Yes. For starters, it's been perhaps a perception emphasized recently because of the tough economic times we are going through.
Yes.
But there are two institutions of governance in the central bank. The board, which I chair, deals with the governance and operations of the bank.
Okay.
The Monetary Policy Committee deals with exactly that, monetary policy. These are technocrats, economists who analyze the market indicators, all the data, consumer price indexes, and we determine that based on the inflation trends, where should the interest rate be set. Now, this does not require lawyers like myself. It actually requires specialized economists who can analyze all manner of economic data that they, put together, and then after assembling all the indicators, including international factors, what is going on in the US benchmark index, what is going on with the Fed, what is going on with the Bank of England, and look at those trends, how they impact us, and their key decisions are driven by the need to attract capital into Kenya, contain inflation, deal with a stable financial system which will then guide banks on what interest rates are being charged, and then inform the public. So effectively, they are not the enemy. These are actually the key stabilizers of our financial system. Before then advising, and it's led by the governor, but with that advice, the governor can then work hand in hand with the government on fiscal policy and ensure that we are in sync to drive the growth of the Kenyan economy. So they are a very important institution, and far be it from us to suggest that they are, I hope they are not scaring people too much. Interest rates go up, they also come down, as we've seen in the past. And depending on the situation obtaining, both globally and domestically, they make very informed decisions as technocrats.
Let's go regionals. You see, when you look at the coast region, it's so different from Nairobi and Western.
Correct.
Yeah, all those regions have their own dynamics in terms of levels of wealth in each of those areas. Is there a way, or is central bank involved in making sure that this region's wealth is managed in this manner? Cash flow in these areas is supposed to be managed in this area or in this manner. Do we have issues to do with the inflation in an area before we come to the national inflation?
It is an interesting question. Central bank does not get involved in fiscal policy. That's a function of government through your treasury.
Okay.
But that also devolves down to your county government, because, as you rightly say, the enabler of the economy in the coast is not the same enabler that you will have in Western Kenya.
Okay.
It's not the same enabler that you will have in Nyanza, where, for example, you'll find the fishing industry being much larger than anywhere else.
Yes.
In the coast, you'll find tourism being larger than it is in Bungoma. So that now boils down to fiscal policy of government. But fiscal policy is actually hand in hand with monetary policy, because you can't clap with one hand, as we say. Effectively, what has to happen is, and this is one of the reasons for devolution, each county and region holds their destiny in their hands. So, for example, if you want to have tourism grow in Western Kenya, there are roles that the county government has to play to promote it. If you want to have manufacturing grow in Kenya, there are roles that the government will play to say, what stimulus packages can you put in your fiscal policy to say this will help manufacturing grow?
Okay.
So effectively, what the central bank will then do, we also get data from various sources. Our research teams look through them and say, look, this is stifling growth here, this is enabling growth here. But it is the Treasury that will then tell government, can we, for example, in our finance bill, put some incentives for this sector because it's lagging behind? And that will be the role of Treasury.
Okay.
On our part as the central bank, we'll say, okay, if these initiatives have been put in place, this is what has been realized. Now you work hand in hand with KRA, you work hand in hand with Kenya Bureau of Statistics, you work hand in hand with Treasury, and all this data comes together to inform how policy should be driven. But the central bank will not go to Kwale and say, by the way, you need to do 1, 2, 3. That's not our role. Our role is on the monetary side,
Yes.
and that informs the decisions that are taken on the fiscal side.
Aha.
Yes.
So do you have like statistics where which region has higher cash flow?
All of these are given by Kenya National Bureau of Statistics, not the central bank.
Okay,
Yes,
okay.
and they will inform you. Normally, it's really primarily sector-wide. That is what government will focus on and say, look, we've seen manufacturing grow, for example, is lagging a lot, growing by about 1.7%. Too slow. Construction, growing at a single-digit rate of, I don't know, 1.5%. And when you look at those statistics, you begin to realize it's not that they are not growing, but it's a slowdown. So even if you see very many buildings coming up, you will then go back and say, what are the occupancy rates in commercial buildings, for example, in Nakuru or in Nairobi?
Yes.
And you will say seems to be an oversupply in this area, which is why people are ending up with certain regions or sections having empty structures that are not generating the contribution to GDP that you expect.
Yes.
And then you know that certain triggers need to be put in place to stimulate these sectors.
Yes.
So if somebody talks about, for example, affordable housing, and they say, okay, you'll stimulate the construction sector, but you then have to think, what's the absorption rate? And we know there's a shortage of housing. So you know housing can drive construction as long as it's kept at a certain level. If you build houses of 200 million, there's only 5 or 6 people who will be buying those houses. So do you focus on that sector or do you focus on affordable housing? And these are policy decisions.
Yes.
So that's how it's driven.
Well, let's talk about the cost of doing business in Kenya. We begin with loans. You see, loans at the moment they are a bit expensive. So what is it that the central bank does to make loans affordable or expensive?
There are two drivers. One is when you look at the cost of money, it's driven by inflation. And when you see global inflation rising, we'll obviously be impacted. And there are some things which are very far away from us that impact us directly. I'll give you an example. A war breaks out in Ukraine. You suddenly have a shortage of global wheat supply. What happens? Wheat prices go up.
Yes.
Wheat makes almost everything in the culinary chain when you think about it globally. So when you look at an element of inflation called food inflation, something as far away as that directly impacts us. But what do you do when inflation is rising? It's counterintuitive in a way, but you have to increase your interest rates to begin attracting more money to ensure that your currency is stabilized. Because if your currency gets into a stable level, you are able to predict your consumption patterns, you are able to plan better. And when we saw, for example, the Kenya shilling falling against the US dollar, it became very necessary to increase interest rates to attract capital. And it's a very strange thing because the counter effect of that is private capital then has to compete with government instruments, which means bank loans become more expensive. But it is a medicine you have to take to be able to bring down the rates after that. Because there's no point of loans being very cheap but the shilling being extremely weak. Because people will pay more for fuel, they'll pay more for everything as a consequence of the cost of energy going up, and everything is dollar based. Oil is not sold in Kenya shillings. You import it in dollars. So what's the point of your loan being cheap, but your dollar being 200 Kenya shillings?
Yes.
You will be dead before you even start. But that brings me to the point of when you look at capital and banks lending today, yes, it is uncomfortable, but I think it's a period we'll go through. It happened before, and you saw it coming down during Kibaki's time particularly. Credit became available, and loans were more affordable. But it still means people must be extremely cautious about the number one thing in business, which is cash flow. Because borrowing at certain rates, even if it comes down and you say, oh, these are the good old days, we're back, you cannot just go and overextend yourself without balancing the cash flow risks. And even as a country today, you've had it said again and again, one of the things we are reflecting on very, very closely, and we have found ourselves in this hole, is you must look at your debt sustainability, both at a national level, but this devolves even to private businesses. We must look at sustainability of debt and treat it with caution. It's unfortunate the way the world is structured. Debt is priced according to perceived, and I put it in quotes, risk. We have a very high risk premium, very sadly, in Africa on our debt, which I actually don't think is fair, and I think even the president has addressed this. We are being taken to the cleaners by perceived high debt risk, yet you'll find an advanced economy borrowing the same money at single-digit rates.
Yes.
Why should we then be saddled with these very high exorbitant rates? It's a bit like loan sharking in some ways, because you get to a level where your debt is priced so high that the only thing you do is keep servicing interest. So as a country, we have to wean ourselves off this debt, foreign debt that is unsustainable. We'll deal with our multilateral lenders, the institutions like IMF and World Bank, but you have to treat debt with caution, and that's a lesson we are learning at this moment, very, very, very harshly. But it's a fact of life.
You see, in where I come from, we have a saying that as a slave, you're only working for the rich. What you've just said makes me remember that we are only slaves working for the whatever we do. We're only working for the lenders. Whatever we do, our cash flow cannot help us clear the loans. And that is something we are seeing even with local organizations. They'll go to a bank, borrow, and then for them to pay, they have to borrow somewhere else. So whatever they're doing, whatever business that they do, whatever cash flow they have, is only enough to pay the interest. That calls for interventions from your office, right?
It's a very sad situation, and you know, at the end of the day, there's one thing we really must guard against. We don't want to get into rate controls. But I always tell the banks whenever we talk, the market doesn't lie. If the market is unable to sustain a certain interest rate level, you'll just have default. And it's not in the interest of banks to have mass default. So what will happen is the correction will self-effect, in the sense that banks will also come back and say, this market, you have pushed it until it has overheated. You must bring it down. The same goes for the state, because let's not remove the speck in someone else's eye and there's a log in ours. Even as the government, we have now reached a stage where the discussion is not about how much more you can borrow to survive as government. It's about how much cost you can cut to ensure that you have breathing space. So as a government, you cannot continue saying we're living on a champagne lifestyle, but the income is a Coca-Cola income. It doesn't work. It doesn't work at all. In your house, if the cumulative salaries are 100,000, we all live with 100,000.
Yes.
And that's how much we know is being paid to the breadwinners. You don't find somebody going to spend 200,000 when they earn 100. So why not, as a government, also say, listen, if we have X amount, we must have what we call the zero-based budget that the president keeps referring to, where we balance the books within what we have. And that is a clear target that has been set. The starting point is not necessarily, as we saw with the finance bill, trying to saddle or squeeze out more from taxpayers who are already strained. Now the fiscal policy is headed straight towards cut. Cut expenditure that is profligate, it's excessive, cut wastage, cut corruption. And once you get rid of all the excesses, effectively what happens is you live within your means. And right now, we have no choice. This is where we are headed, and at the end of the day, we don't want to get into a situation like Ghana's. Ghana eventually got into default. One day, wake up and say, we can't pay. Even if you're holding bills or bonds, we can't pay. We make a payment plan. You cannot afford to do that, because then your credibility has gone out of the window. So even us as a central bank, you asked what keeps us awake at night. That is one of the key things that we want to ensure, that we have credible credit ratings that can put us on the global map, and we can deal at the top table with all our financial stakeholders and be able to have an honest conversation about fairness in the system and about our repayments, our ability to manage our fiscal affairs and monetary affairs sustainably.
Let's go back to the rural Kenya. The small business community, not small in numbers, but small in size, they depend on cash flow. Given that it's very hard for them to access credit because of the obvious reasons. The story you've just given us, or the response you've just given us about, like, let me use the word of start the the government, okay, living within means. These guys have done it for the last 50 years, but they still can't access the right credit. For them to expand and even offer jobs at the rural level, because most of the traders at the rural level employ 2, 3, 4, up to 10 people. But then it's the same problem over and over. They cannot grow, they cannot expand because they don't have credit. Do you guys think about that?
A lot. And actually, it's there are banks that you can name today who have become accessible to those type of traders. There are banks that have made billions from being very small banks to being very big banks today, because they went to what we call the fortune at the bottom of the pyramid. There is a lot of very credit-worthy people in this country who previously did not have access to credit. And credit to these banks, they saw the gap. There were big banks that were saying, no, we don't want to deal with people with less than 50,000 in their account. And then other banks came and said, you want to borrow 5,000 in the morning, you pay back in the evening, we'll give it to you. And that has lifted a lot of people into what you call financial inclusion, bringing them on board. Then you have tools like digital access to credit, which also have brought people on board. And in this regard, the central bank is also not being left behind. You will now see that even access to government instruments, like I was saying, you don't need to build branches. We now have created something called DAO CSD, where wananchi can invest in government securities to say, my little savings also, I want to also earn interest from government. So they are then lending to government, and at a retail level using digital instruments. You don't need to go to the bank. You actually open your DAO CSD account online. You no longer need to walk to a central bank to settle payments. You can do it directly from your banking system wherever you are. And this includes people in the system. So we are actually encouraging banks, and not just banks, other financial institutions, because today you realize we have digital credit providers we are licensing, and saying, if credit is to be availed to people, why only have the channel through the traditional banks? There are digital credit providers, there are microfinance institutions that are more aggressive at the retail level. So these are the kind of people who are getting closer to the people. Our work is to enable them and give them an environment where there are fair trade practices and people are able to access those facilities from the comfort of their phones, their homes, and say, whether it is payroll lending, whatever it is, it's all digital credit. We license them. And we are encouraging these people to participate in those sectors of the economy. What does it do? To my mind, it creates something called competition. And when you create competition, the market will correct the pricing, and it will arrive at a level where our ambition in future is to have the more players, the better. that will set prices correctly, and people will be able to access this credit.
Which brings me to follow-up questions. One, you mentioned M-Pesa plus
all digital platforms.
Other,
yes.
About 40 digital lenders. These people don't have they don't have issues the way banks do, but they're doing what banks are doing. Talk about M-Pesa. What M-Pesa is holding per day is trillions. It's a bank of its own, but it doesn't have the costs these other banks are having every day. So does that keep them unfair competition? Because it's offering services of a bank without going through the costs of a bank. That's one. Number two, when you talked about microfinance, on the rural setting, these people have something called merry-go-round. They borrow money from each other. They grow themselves, and some of them have actually grown big and actually became something. But then microfinances are supposed to be supporting this small economy. But then for you to set up a shop called microfinance, you really have to pay huge. So those accreditation, the hardships to get accredited to start a microfinance is one. And then while on the other hand, it is timely, it's supposed to be supporting the small economy.
Now, two things. Let me start with the second question. A lot of institutions you see today, and there are stories, I'm talking about stories which have evidence. Some started as building societies, which were previously SACCOs, which then grew to become banks, and they've grown. So what we are seeing in the market today is not like it hasn't happened. It's about having the discipline to grow steadily, right? You'll start as a digital credit provider, let's say, and then move on to become a microfinance. At each stage, your growth is determining the hurdles that you can meet. And with these people growing steadily, at the end of the day, like I said, the market will determine your growth, but your own discipline as an institution will also determine the journey that you take. Haven't we seen banks that have suffered in the past and collapsed under mismanagement? Our work as a regulator is to ensure we watch them very closely to ensure depositors are kept safe. But our work is also not to stifle innovation. When digital financial facilities first started in this country, you'll recall banks were the first enemies. They fought very hard, saying, why are people who are in telephone business now doing financial services? But the then governor sat with the Ministry of Finance and said, but why are we stifling an opportunity for Wananchi to be given a platform to be financially included? Today, every bank is working with telephone or mobile banking services. Every single bank. Such that anybody here can pick up their phone, conduct a transaction on the bank, whether it's bank to digital money or digital money to bank, and we all know who the largest players are, and inevitably it has benefited even the banks and the microfinance institution, but most importantly, it has benefited the trader on the ground, Wananchi. If I need to send money home to the village, whether it's a funeral, harambe, or whatever it is, they don't have to look for me to provide transport to somebody on a Saturday to send them help. Somebody has a medical problem in Mandera, they receive their money in 2 seconds. Whether it comes from a bank to M-Pesa, to the phone, or vice versa, or the reverse, it happens in an instant. We are actually far more advanced than Western economies in this particular aspect. So the lesson here is also don't wait to copy what others are doing. You can also be the pioneers in leading new ways to access credit, new ways to grow institutions. And like I said, anybody who's sitting back waiting for innovation to wake them up, innovation doesn't wait for you. It runs way ahead of you. And as a regulator, we have said we are not going to be chasing new developments in the market. We are going to be the ones pioneering from the central bank and enabling new innovations in the market. Long ago, there was somebody who was running a company called Kodak. I think all of you are of the generation where you saw cameras,
Yes,
and we would all go and process our films. The man at Kodak was sitting in his boardroom saying, we are doing very well. But did they see the mobile phone coming? Did they see the disruption in their industry coming? Today, you can barely find anybody with a camera with a film. And those photo studios that were in every town in Kenya are all closed, because innovation came and happened. So, as they say, when things are moving, don't fail to be on that bus. In fact, if possible, be ahead of the bus so that you can benefit from the advancements. And the same goes for any economy.
Yeah.
Even as we look at an economy that is growing like Kenya's, you want to look at even Western Kenya and say, what else can we do? Because you cannot sit at home and say, for 5 generations, all we did was grow maize and sugarcane. You can't. And expect growth, because you're not going to expect different results. You have to look at a completely diversified economy where people have more purchasing power and can grow that economy and look at different sectors and innovation. Otherwise, doing the same thing over again and expecting different results does not make any sense.
Yeah, you didn't say anything about the regulation.
Yes.
You see, regulation of these digital finance institutions.
Yes.
It's like they're running away with everything.
Yes.
When yet banks went into cost to establish.
Yes.
Number one.
Yeah.
But then let me add this: there are digital currencies also mentioned for something.
2 things. One, you can regulate digital credit providers to protect consumers. You cannot regulate it to protect banks. Banks have their sector of the economy that, and you will look at their results as they announce them year in, year out. They are thriving in their sector. You are not going to stifle somebody else's growth to protect another competitor, because you want the consumer to be the beneficiary of these services. Let the market decide, do I want the digital credit providers and am I safe? Us as a regulator is to make sure they are not engaged in predatory practices or unfair business conduct that will damage the interests of the consumer. But as a regulator, remember, we are a neutral player. I'm not pro-bank or anti-bank. I am pro-open market. Let the market forces be as open as possible, and you'll get the best results in an open market. It's the same as your currency. If you think you're going to intervene to, say, artificially support currency here, there, how long will you do it? You don't have a bottomless pit to manage your economy. At the end of the day, the market will decide, we think the Kenya shilling is worth 120 to the dollar. And that's what they'll pay. The price is only what the customer is willing to pay. The same goes for interest rates. If you price yourself out of the market and you're too expensive, they vote with their feet. They'll walk to the next bank. There are very many of them out there. If they are done with the banks, they'll walk to mobile credit providers. They'll walk to digital credit providers and say, this is quicker. I might as well just take a salary-backed loan with any microfinance institution and pay them back. Because it's quick, it's efficient. So if you solve a problem, who are we as CBK to come and stop you? But let me move on to what you call the cryptocurrencies. That reference is a new space globally. And as a central bank, one of the things we have said is cryptocurrencies are global phenomena that are designed not to be regulated. That is the whole premise of cryptocurrency. So if somebody tells me, we need you to regulate Bitcoin, for example, who am I calling? There's no board of Bitcoin to call to central bank and say, can we discuss Bitcoin with you? Bitcoin is everybody who's willing to trade with each other. Yes. So the position the central bank took is, if you want to take that risk, there's no asset underpinning cryptocurrencies. Some of them will tell you, oh, we are fully backed by the dollar 1-to-1. But who audits you to check that? We can't audit. Do we have capacity to go and say, can we inspect the books of Ethereum? Where would you go? Can you go and inspect the accounts of Bitcoin? Where would I go? There's nowhere to go. Whoa. Bitcoin is a peer-to-peer trading system where people say, I trust you, you trust me, and the blockchain gives me enough assurance to invest. But there is nobody on earth who can tell you we can audit Bitcoin and regulate it. So the central bank's position is, it is unregulatable, you trade at your own risk, People are happy to go into it. So be it. Trade with your risk capital. Let's say, for example, you're worth 1 million shillings. If you decide to put 20,000 in Bitcoin, it's a risk you're able to take. But if you put 1 million shillings of your worth into cryptocurrency, then I say you're taking a rather reckless risk. If you want to diversify your portfolio, it's entirely up to you. But remember, even the stock exchange, prices go up, prices go down. So you choose and say, I like this company because it has solid fundamentals. I trust the CEO. This person has had a good track record of paying me dividends, and therefore I like X company. Or I like their product. Somebody can say, I'm very confident. EABL sell, everybody I see is drinking Tusker, so they must be making money. Their track record shows they are selling this product very well, it's growing. I'll invest. The same goes for anybody taking a risk on crypto. You have to research, do your own research, determine whether it fits within your level of risk and how much you want to put in. Because you and I both know, you've seen major crypto exchanges collapse and disappear, not with billions of shillings, with billions of dollars. And when they go, they vanish without a trace. So accept that there's a level of risk where even the central bank, because it's not a monetary instrument here, it's called a cryptocurrency. It's operating in a cyber environment. So it's not a currency we can even have an exchange rate with. Somebody says it's worth this much to the dollar. That's their view. Tomorrow it will be worth more, could be worth less. How do we regulate? We can't. So we are not in that space.
Do we run into risks of money laundering using that avenue?
Globally, people have also said this is exactly the problem. When it is unregulated, you can literally do anything with it. And this is why you can't expect a central bank to say we're endorsing it. Because if I endorse something, I must be able to see it, manage it, and know where the risk factors are. That is why you cannot go into regulating something you don't know and can't manage.
Andrew Musangi is the chairman of the central bank. We're having a conversation on managing the economy of this country. When we come back from the break, I would like to go to two difficult things: treasury bills and something else I'm not mentioning yet. Just in a bit.
Asante. So far, so good. Not mentioned. For the people. I tell you. Yeah. Okay.
Yeah, so we can go back.
Yeah.
Okay. Welcome back. Chairman, treasury bills is a very vital. It's very attractive. It's on the Kenyan economy. Everyone talks about them. They're very good and very crucial to the economy of the country. But how do they work?
Okay. Treasury bills and bonds are basically a very simple instrument. It's the way the government of Kenya borrows to meet its day-to-day obligations. There are various tools. Treasury bills are more short-term, bonds are more long-term, but bonds can also be of different types. Infrastructure bonds, for example, and just bonds for budgetary support, but longer term. Effectively, in very simple language, it's your way of lending to the government and basically earning interest. So they are a very good tool for people to save. But if you think about it even more, your bank, today you deposit your money in the bank. Where does your bank put that money? They have several ways of handling the money. Interbank lending, lending to you and I at a higher interest rate and then working the margins, or simply lending it to the government and buying bonds and bills. That's what your bank does. So what the government has done is, over the years, obviously, to access savings in Kenya, you have, again, 1 million shillings that you want to have as your safety net. If you lend it to the government and your bills are at 16%, the government will basically tell you every 6 months we'll pay you your coupon interest. So 16% with 1 million shillings, every 6 months you'll get a check of 80,000 from the government, just less withholding tax. And that's it. The same way, if you put your 1 million in a fixed deposit in the bank, you'll also get the same interest, but it will be at a lower level because the bank must have a margin to on-lend that money to either the government or to normal borrowers. So a bank will take your money and give you 14%, but lend to me at 22% or 21%. And the margin is what generates profit for the bank. So that's simply what treasury bills are. So what the government has said is, if you as an individual have savings and want to access the government directly, you can come and lend your money to government.
So anybody can do that?
Anybody who's here. Foreigners also invest in bills and bonds. So anybody can do it.
But that is also the reason why banks would rather lend to the government than to us. That's why it's very hard for us to access credit.
Now, yes and no. If the rates become very high, it then puts pressure on the banks to have a margin. Remember, the banks make more money from you than they do from government. So banks are not in the business of lending to government. It is when they have surplus cash that they then use the surpluses and lend to government. Because we may be, as government is perceived as a risk-free option. So if you're playing it safe and the bank is balancing its books, it will say a certain portion of money must be in government instruments. But the real business of banking is lending to you and I. Because the return from you and I is far better than the return from government. But the impact, you are right on the impact statement. If government rates get higher, automatically the risk premium for us individual borrowers also gets higher, which means lending becomes expensive. But under no circumstances should people be under the misconception that government then becomes more attractive. Government has less risk, but also less margin than lending to private people. Yes.
So these bills and bonds have an impact on national debt.
Yes. And with a part of the portfolio of government debt includes local bills and bonds that are out. Yes, that's part of the government debt book. Plus whatever is from multilateral lenders with IMF, World Bank, whatever is from bilateral loans from China, from the US or the UK, that's also part of the government debt book. And pending bills is part of the government debt book.
At this moment, what is it as in percentages in terms of what does the government owe in terms of percentages?
I think at last count, because this comes from the Treasury, remember at the central bank we deal with the direct borrowings which will go into bills and bonds, but we don't deal with the pending bills at CBK.
Yes.
But at last count, I think we're at about 10.8 to 10.9 trillion as total global government debt. But that comes from the office at the Treasury called the Debt Management Office. They are the ones now mandated, and I think His Excellency the President recently appointed a new head who actually was taken from Central Bank to manage the Debt Management Office. Yes, because that's a very, very key factor, for the simple reason that we are now, out of every shilling we earn, I think we are now paying about 60-something cents towards debt settlements, which means you are only left with 30-odd% to manage your bills, wages, and overheads, and development spending, which is too little.
Whoa.
It's too little.
Whoa. Okay. Some share of someone should position himself or herself to come and buy all these loans from the government.
It would be difficult to manage debts like that, but again, this is what we keep saying. You don't want to remove money from one pot to just create another hole in another pot as you're solving. Robbing Peter to pay Paul is not a solution.
It's called consolidation.
Yes.
You see, when you
Yes.
consolidate,
Yes.
you put all these loans into
Yes.
one.
Yes.
Then that would be manageable, right?
There are debt consolidation measures that are akin to what you're referring to, but it's not put in those terms. For example, we get more concessional lending from IMF and World Bank.
Yes.
So if you have expensive debt in one pot, you are better off reassigning that debt, even in your house. If you find Bank A is lending to you at 20% and Bank B comes and says, we'll give you the same 5 million at 15%, you reassign your debt.
Yes.
That's a simple debt management tool, and that's what government does. You want to go back to IMF and say, okay, on these terms and these terms, can we reassign for example, our Eurobond debt and say, let us take it at a lower premium of IMF and reassign this debt and settle as we did the Eurobond earlier this year. So you say, okay, this makes sense. And it does make sense. Number two, you look at your coupon period and say, if this is a 5-year debt, do I want to pay in a bullet after 5 years, or do I want to pay a bit of it after 2 years, a bit after 3 years, a bit after 4 years, and complete the final payment after 5 years? What does that do? It softens the bullet payments. So you are able to then manage your portfolio of debt in that manner. Yes.
So the conversation going on at the moment is these loans, those that you can spread, you can be able to spread.
Yes, absolutely. Absolutely. And take your coupons in what I would call bite-sized chunks. Unaunga kidogo so you maliza in installments. It's like building a house. You can go back to the village and say, I want to put up a 4-bedroom house. But one day you drop stones, the next day you bring cement, the next day you bring sand, and you keep building like that. The debt repayment is no different. Yes.
Which actually has very direct impact on countries' inflation.
Yes. If you are overextended, you will then quickly find that you are straining. Because remember, every time you're making, let's say, like a multilateral debt payment, it creates a demand on your foreign currency. Now, when you create that demand, there must be a matching supply from your GDP to sustain it. If there is a mismatch, then there's more demand for dollars than there is for shillings, which means your dollar gets expensive, your inflation goes up, your cost of living goes up.
Yes.
So that's the delicate balancing act to make sure that your book must always have a match between what is demanded of your overheads, your payments, and what is coming in. So government's key job at fiscal policy level is to stimulate what comes in, to make sure that cake gets bigger and bigger, and therefore your debt management becomes more and more manageable. Yeah.
At this point, we may want to understand those factors that are putting a strain on the Kenyan economy and creating the inflation to be high. Because for a long time, like 4 or 5 years, we've not been faring on very good as a nation. So what is it that is straining? What is it that is keeping our inflation high?
You see, it's both. It's exactly what I've been talking about. Once you have heavy debt payments, you will then find that it's a snowball effect in a way that you start knocking on needing more money to pay more debt, or borrowing more and finding that you are starting to strain on payments because your borrowing is ahead of your productivity. Now, when you borrow, you're anticipating, obviously, your GDP is growing. The country we are now growing at is estimated at about 4.5 to 5% annual growth. So you have to make sure that you stimulate that growth to ensure that you have enough GDP surpluses to be able to meet your debt obligations. We have met them. We haven't defaulted yet. But the accepted fact is that we are very thinly spread. Now, when you look at inflation, even in the US, now they are just about getting it below 3%. That's the United States. If ours is at 5.2, 5.3, you are also looking at global parameters when you talk about your repayment, because inflation is there. But you must contain it. We brought it down from 7, 8% to 5%. Right? With fiscal monetary policy interventions, you support it and you restructure where you need to restructure, but it's a continuous balancing act. And the fact of the matter is, yes, we've had big infrastructure projects that we've invested in, which have to be paid for. At the end of the day, one day you have to pay for your standard gauge railway. One day you will have to pay for your highways. One day you will have to pay for, all these. People celebrate and say, yeah, we open it and cut the tape and open a plaque. But it's like your house. There's a bill. You move into your 5-bedroom house, there's a mortgage with whichever bank. It has to be paid. So you can have your housewarming party, but at the end of the day, the bills are there. They must be paid.
And then, and then there's also corruption.
Yes.
How much are we losing to corruption? And is the central bank aware?
One wonders. We have had the presidents talk about it time and time again. we do know it is a huge cost to this country. And the sooner we stop bleeding from that end, the faster this whole country will be able to grow. You see, the thing about corruption is it benefits a few, very, very few. But economic growth benefits the whole country. Because if somebody tomorrow is able to access funding to set up a manufacturing plant, again, let's say in Bungoma, that will employ 400 people. Those 400 people buy goods from another 4,000 people. Those 4,000 people take another 8,000 people to school. Do you see what I mean about the economic effect, the knock-on effect of growth? Everybody benefits. Those people who are taken through school then come through the system, gain employment, start working and become contributors to the economy. So the knock-on effect of economic growth benefits everybody. Corruption, one person steals 100 million, they end up spending the 100 million on one car, one house, one luxury item somewhere. Who does that benefit? Going on holiday to Dubai? Who benefits from that? Is there anything you see other than what you see on social media? You see nothing. It contributes nothing to this country. And it's a cancer that we must root out, because whatever you are doing as a private individual, if you are in public service, you are here to serve everybody from Mama Mboga all the way to the person who may live in Karen. Those are the people who pay your salary. They pay VAT every day. Some people say they don't pay taxes. They pay VAT. They buy fuel. They contribute to the exchequer. Yes. One way or another, they contribute. And that is why if you don't deal with that monster, actually it's what is finishing us.
Let's end with what I do want to mention. The foreign direct investment brings foreign direct dollars to a region. I'm taking you back to the regions. The Western Kenya region has coffee, tea, mining, but in volumes that is negligible. That means we don't have direct dollars coming to the region. I don't want to count diaspora remittances because that's welfare, and welfare is not, they don't take it to the bank, right? So, what is it that you, where you sit, will encourage Western Kenya to do, or who is supposed to do to make sure Western Kenya is like coast, where it has tourists coming to spend dollars there. Masai Mara is a very rich community where dollars come there directly. What about Western Kenya?
For me, there's a couple of answers, but the simple one is charity begins at home. Charity begins at home from the perspective that do not wait for somebody from Kwale to come and sort out Western Kenya. Nobody knows Western Kenya better than Western Kenya. So for us, if you look at big multinationals, companies like the Monsanto's, Bayer bought Monsanto, and you look at those companies and their investments, they're going to be in agriculture. How hard is it for the county government to sit and come up with a policy to stimulate large-scale agricultural investment? How hard is it? Right? Number two, look at big sectors in Western Kenya. Sugar. We have mired sugar in politics over all these years instead of focusing on stimulating its growth. One of my biggest regrets in the sugar industry is Mumias, because Mumias was a giant in Western Kenya, a showcase. If you had asked me, private sector investment in Mumias should have been thriving by now. It should have been the largest sugar processing company on the continent, and it would be paying millions to farmers, millions. And we should be moving to large-scale growing of sugar with its efficiencies at a policy level. But instead, you throw politics at everything. Politics pulls down now even private sector investors in sugar, who are huge. Huge. There are companies now that have put a lot of skin in the game. Where you see private money, I assure you, there is money to be made. Private money does not go into places where they are losing money. So today, You leave Mumias aside, you've gone into private money. Look at the big sugar players in the private sector. They are thriving. If I'm the governor, I would be sitting down and talking to these people and saying, what do you need to grow to the next level? You have already invested.
Yes.
What do you need to grow? Because my work as a government is to provide the enabling environment.
Yes.
What do you need to grow? So that you become a real giant. Right? What takes Monsanto to Nyanza? Go and study and find out what took them there and what will it take to bring a similar company or the same one to say, how can we invest in your sector? Gone are the days you would have government agricultural institutions and tell them you are the ones to drive growth. Most of them we have seen have been crippled by the usual bureaucracy and inefficiency of government. So for us it's to say, if we have a very nice area of natural beauty like Mount Elgon, how is it that we can stimulate a tourism investor to say, please get this on the circuit of tourism, and private capital will come as long as they see the government is there saying, let's move forward. How do you take a governor and then tell him, okay, go and talk to the national government, find a large tract of land where you can say, can we create a special economic zone in Western Kenya, as we have seen done in Kwale, and say, this is where you bring investors and say, this will be an economic hub of the area where investors in industry will have certain advantages. You come in with the benefits, cheap land, whatever, come and set up and say, you know, the president has addressed cotton, for example, and say, get cotton growing stimulated here, or processing of value addition out of Western Kenya, so that by the time products are leaving, they are already value added and leaving our county to go outside the country to bring in those dollars. You don't have to have foreign direct investment necessarily, but you have export earnings.
Yes.
We have very fertile soil. What is going to stimulate our people to do high value agriculture? What is going to stimulate them? Government. We are going to say, listen, tell us what we need to do to get more people growing horticultural produce. You go to Kitale, I've been to people's farms you would not believe, where somebody is exporting directly to Europe out of Kitale. And you cannot tell me it's not being done, because I've seen the avocados going, I've seen the flowers going, and these people are right there. For county governments to go and visit and say, thank you, this has been done, it's employing 400 people. How do we get the rest of the people to get into this game? They are doing it. They are doing it. I know somebody who's processing high value processed coffee, selling directly to the US under AGOA. He's a Bukusu like us. We are sitting there, he's our neighbor. And you say this man is doing it. Why isn't the county government saying, let's go visit these people and make them ambassadors for the whole area? So that everybody is not saying, let me grow a few onions and go and sell them in Kimilili by the roadside and think I will lift myself out of poverty. You will not. You will not. These people are doing it next to us, privately. Why can't we, as a policymaker, say that Western region should sort out Western's problems and challenges ourselves, because there are people there who are doing it. So we can go and tell them, let's emulate what you are doing. I started off by saying you can't do the same thing over and over again and expect different results. It will not happen. And every 5 years, people will come to you with a small 50 shilling notes and say, please vote for me. But we don't hold them to account after 5 years to say, during your 5 years, what have you delivered? Don't come and tell me I extended maize growing, because that's what we have been doing.
It will be there.
That's what we have been doing.
Yes, it will have been there without.
Come and tell me what you did that was revolutionary in your county that changed the lives of people. Don't come and say we did the same thing over and over again. So these are low-hanging fruits, as far as I'm concerned.
Talking of low-hanging fruits, they are also they can also help create jobs.
Absolutely.
And looking at capitalism, the way money is moving around in Western, the bulk of it is actually in the hands of people who don't live in Western, and they actually don't come from there. They only go there to get money and get the money out. So the world of Western is actually always on a flight. It's always going. But interventions, who is supposed to? Because the government is there, it's doing its bit. National government has brought in aggregation zones in every county. Bungoma is running, Kakamega is running, Busia is running, Vihiga is running, again, Trans Nzoia is running. But then, that's it. The county government has been meeting organizations from everywhere, talking about bringing in investors to come and support the local economy. But the locals who will have been on the driver's seat are actually not involved.
Yeah.
So whose mistake is that?
I think, and we are guilty. Let's also accept that, because I always say you can't just blame government for all your woes. There are a lot of people also doing a lot of things outside of Western Kenya. They are not taking the money necessarily from there. Actually, they've gone out, and this Kenya is big. You can run a business anywhere, by the way. You can go and set up a business in Nyeri if you want today and run it from there if that's where your market is.
Yes.
But what I was talking about was a sleeping giant in Western that needs to be woken from its slumber. And this is where I also say we must engage. And when I say we, I'm not exempting myself. I'm saying we must engage with our county governments to say, let's have a think tank and say this is the policy body that will whisper in the governor's ears, the MP's ears, and say, why don't we do this to stimulate this? Now, remember, you're saying the government has done its bit. Government also sits back and says it's devolved. It's devolved. So it's up to you to come and lobby, let's say to President Ruto, and say, Your Excellency, can we work on a bill to support ABCD at our county government level? Because we see this being the hindrances and the stumbling blocks. Number two, you can also go to a governor and say, in your budget, can you prioritize in the county budget 1, 2, 3 areas? Because we see stimulation being able to come out of this to achieve far more significant economic growth. But all too often we sit back, we don't look at the county finance bill, but we complain when it comes out. But you never looked at it. They call for public participation, you don't submit. Then how do you blame the governor for doing what he thinks is best with the available resources? Because if we also don't contribute our brains, it's far too easy to criticize and say, hey, the governor has not come to see me. Is it him to come to see me or me to go and see him and suggest? Because he's the governor of the whole county. The MP has a constituency. There are people sitting there every weekend asking him for money for bursaries, money for this. So at what point do we also engage with our leaders and say, okay, let's think through policy and say, listen, at this stage we have people in different areas of government who can clearly whisper a word in the right ears and we get something tilted in our favor. But it's not enough to say, oh, we have a few people here who have one job here, so and so is chairman, so and so is speaker, and you're happy. That's not growth, because that's somebody doing a specific job to contribute to national development. What is more important is for the people to be held to account. At the end of the day, they can't exonerate themselves, are the leaders on the ground. But we also can't abdicate our responsibility to engage with them. Tunawaongelesha every Saturday. You meet in funerals, people have a drink and a meal and go away. But you have not discussed a structured development conversation. 5 years down the line, magari ndio hizo campaign. Everybody, can you contribute something for my campaign? But at the end of the day, nothing.
Maybe it's because someone feels like I'm not under pressure to do this. I have to do it out of goodwill. And because it's goodwill, I can choose not of the good. That's one. And then secondly, maybe it's because we feel like we don't matter.
I would say if there's any positive we can take out of the recent Gen Z engagement with, for lack of a better word, with our leaders, is if this does not lose momentum and stays as it is, accountability is coming. There's a day of reckoning. It's actually here already with us. Leaders who will go up in 2027 will seemingly be facing a very different animal in the electorate. Because the level of awareness that we have seen and willingness to engage on just one finance bill, if that momentum is carried forward and not lost, everybody will have to put their books on the table on Judgment Day. in 2027.
For us to scrutinize.
And we will scrutinize, we will judge, and it doesn't matter what money you throw at them. These people will be happy to eat your money when you come and throw it. But when the time comes to vote, there will be a level of accountability we have not seen before. So if there's any message anybody wanted to take out of the tough period of June, July in this country, is accountability is now here with us. Please, let's get our house in order, because in 2027, I think the questions that will be asked will be very different from what we have seen before.
Let's end with this. Communication. You see, on the policy side, usually this information is given out, but the way it's delivered to the audience does not, there is no measure, there's no way of knowing that what we gave out or the information we wanted to take out has been taken to the desired audience. So in the end, you meet someone in the street, you ask, the government is saying this, someone says, oh, whatever they were saying, you mean they meant it. You see, so this communication, who is supposed to drive the, you talked about one of the mandates, one of your job at Central Bank is to change the perception for us to interact more with the Central Bank. Whose job is it?
That is the job of government, and even us as a central bank, we have come to the realization, even now, when you see the structured manner in which the monetary policy statements are coming out, we actually actively engage the media. Before, people would read about monetary policy when they hear the statement was issued last week. Now we actually make sure it's a media event. The governor has a formal press conference. It is put on our websites. It is put on all our social media accounts so that people can interact with the documents and the statements that are being made by the central bank. Number two, when decisions are made that affect the public in any way, shape or form, we also actively go out with our communications department to reach people. Because before, it used to be a very secretive thing. There's this little club called the Monetary Policy Committee. The only line you see is the interest rate. Oh, now it's been changed to 10%. Now it's been changed to 11%, with no substantive explanatory document. Today, the whole statement comes out with detailed mandate going behind it, data that has supported it, and the governor holds a press conference to actually take questions like from the fourth estate like yourselves and engage with people. And that is our way of trying to rope people in. On treasury bills, we have gone even a step further. On the Dow CSD, Central Bank is now doing roadshows, actively calling on people, please come and invest. Do you understand what bills are? Do you understand what bonds are? Can you come? Now, these town hall meetings have actually been very effective. In September 2023, we had less than 28,000 people with the Dow CSD accounts, no treasury bill accounts, because Dow CSD was not there. Less than 28,000 Kenyans in a population of 55 million participating in investment in government securities. Today, we are hitting 80,000 in less than 8 months. 8 months, 80,000. This time next year, we are hoping we'll have tripled that number. Why? Because it's a tool of investment. If you open a business today and you are able to earn 20% return, you're doing very well in any language. So why not invest in government securities as part of your portfolio and earn 16, 18%, depending on the bonds and bills that you select? So we're going to tell people who are saving out there, by the way, there is an instrument here where you can earn this amount of money. Kenya has always had an obsession with property, nunua shamba. The fact of the matter is, if you go and buy a shamba in Athi River and it just sits there as soil, you're earning nothing. You have to have a revenue stream that produces cash. So we're also going out there to educate people. You have two choices. Let's say you have 10 million. You can buy a flat in Ruaka for 10 million. Your rent is 50,000. 50 times 12? 600,000. So what is your earning? 6%. Right? You can come and invest in government bonds and earn 16%. So when you look at your portfolio, should you not be aware that there are better instruments? When you buy the flat, you have to fix leaking pipes. You have to fix a broken cupboard. You have to deal with some parts where there's no tenant. The guy tells you, oh, I've been transferred to Kisumu, so I'm moving out. Then you have to wait for 3 months without any money, hoping for that money to come in. So, why? And I agree, the flat, in long term, you may have real estate appreciation to gain, but that is not cash in your pocket. Appreciation is your perception of your value. So we are going out to educate people and telling them, by the way, with your second 10 million, instead of buying a second unit, why not put this one in treasury bills?
Yes.
And earn 18%, for example, on your bond. 18% is 1.8 million. 1.8 million divided by 12 is 150,000, right? Per month. Do you rather have 150 or 60 every month? And you're not fixing water pipes. You're not dealing with a tenant who's absent. You're not dealing with a defaulting tenant. You see the things that we want to educate Kenyans on. This is what I'm telling my people now. Go out and talk to people about the opportunities that are there. Because if I'm sitting in Western, I don't have this information available readily at hand. Why don't I go out and teach people also about financial literacy with these instruments? So we have become activists as the central bank.
Wow, that brings us to the end of the conversation. I'm sure it has been informative. And I want to take this opportunity to say thank you.
Thank you very much for having me. Yes.
So that we can interact with you.
Yes.
On behalf of the director of the show, Kenneth Kibet, and my cameraman here, Leonard Omalo, I just want to appreciate you for following the conversation. Stay tuned. We come back next week on Tuesday with additional or something else, something more interesting and something more new. You can follow us on social media, WestTV_Kenya on X, or you can always follow this conversation on YouTube, West TV, West TV Live. You can follow me at Mr. Kitui on X, Kitui Kwasimiti on my Facebook page. Leave a comment and always subscribe, share, and talk to us through our social media. Thank you so much. This is CKS.